All right, good morning, everyone. I want to welcome you all to the first one-to-one mining investment Dubai event. We're very happy to be here and look forward to returning year upon year. Just a few housekeeping notes. So if you see any, we've got a load of CEO presentations happening across the next 2 days. If you see any companies that you want to make a meeting with, if you haven't already, feel free to visit my team at the registration desk, and they will help to get you set up with meetings. We will also be sending out a survey after the event. We want to hear your feedback on, how you found it, any tips for future years. So please keep an eye out in your inboxes for that. And with that, I think we'll get started with our opening panel. So joining me up here this morning, I'd like to invite Philip Clegg, Managing Partner at Orion Resource Partners, Bernard Dahdah, Executive Director, Senior Commodities Analyst at Natixis, Anish Jain, Group CEO of Equitane, and Tim Keating, Co-founder and Director at Tanjun Capital Limited. All right, so maybe we can just start with a quick introduction to each of our panelists, and then we can get into the conversation. So we'll start closest to me with Tim.
Hi, Tim Keating with Tanjun Capital Limited. I think most relevant to this panel is my more recent background in the region, just stretched over the last 10 years or so. I ran the private equity business for one of the region's sovereign wealth funds, and more recently been advising a family office in Saudi Arabia and looking at various things across the Saudi Arabian mining industry, from exploration all the way to midstream and downstream projects.
Great. Anish?
Good morning, everyone. My name is Anish. I'm the Group CEO for Equitane. We are a diversified business house, and most important for this discussion, we have a mining portfolio spanning across sub-Saharan Africa. We have invested more than $4 billion across various assets spanning across different metals and commodities, and I look forward to this discussion. Thank you.
Hello, Bernard Dahdah from Natixis Investment Bank. I'm in charge of metals and mining research within Natixis. Most recently, I think one of the most relevant things is that we've been advising the French government on setting up some of their strategic funds, and be it from sorry, a little jet lagged. Some of the strategic metals and mining funds that they're creating.
Good morning, everybody. My name is Philip Clegg. I'm managing partner at Orion. By academic background, I'm actually a geologist, as you can see. But I spent the last 23 years now just doing mining deals. So Orion is one of the largest investors in the space. It's multi-strategy. But the bit that I look after is really the private capital side of the business, particularly doing transactions in the commodities that we need for the future, so decarbonisation and electrification.
It sounds great. So thanks for all of our panelists for joining us up here today. So just a note for the audience, we want to keep this quite conversational. So we do have a microphone at the back of the room. If at any point throughout the next 40 minutes you have questions for our panelists, feel free to put your hand up and we'll get a microphone over to you. So I thought we could start with kind of looking at the broader space and the global macro situation that we find ourselves in right now, and how all of these issues going on in the world are really impacting the metals and mining and investment space today. So what do you see as some of the biggest impacts today on the industry? Maybe we'll start at the end with Philip.
Sure. It's a very difficult global environment right now, but I think we need to maintain a view on the long term, and I think that is very, very important in our industry, particularly for investors like ourselves that do take those long-term views. I'd say that positioning right now, it is absolutely crucial to have diversification in the portfolio. And that's something that we at Orion have done right from the outset. There is a blend across each of our funds, across precious metals, particularly gold, together with commodities that are levered to global GDP and other, I'd say, mega trends like urbanization, societal development, and decarbonisation. So where are we right now in the world? I think we are at a bit of a crossroads, particularly with what's going on from a deglobalization perspective and a de-dollarization perspective. And I think managing a diversified portfolio is crucial at this point in time.
From my side, what I can see and what I found most interesting since the Russia-Ukraine war is this active effort from a European side, at least from what I can see in terms of diversification of portfolio, but also of geographies. And the diversification of geographies is a bit of a lesson that, at least from what we can see now, is just to stop focusing on sourcing from one zone or one country. And even in the CRMA Act, which Europeans passed, they've put specific targets as to how much you can source metals and mining from one specific country. So what I've seen over the past year and a half, and what I've been mentioning about the French government, is they're setting up their own metals fund, and they've set up another fund for investment in equities. And the idea is that, in assets. The idea is also diversifying regional portfolios. So that's why I think the Middle East right now, the GCC, with all the investments they're putting in, has become very interesting and attractive for Dahdah.
Thank you. Thank you for the question, Emi. I think it's very interesting. We primarily operate in the African region, and the kind of challenges that we come across in Africa are quite different from many of the similar investments that you see across, let's say, Europe, Middle East, or in the Asian counterparts. What we have seen primarily for the risk diversification is to continue expanding onto a portfolio, but most importantly is to create the platform approach, which will allow you to access the right set of assets that we have under the belt, but at the same time understand the governments and the changing mining conventions that they come across. We have recently administered a situation where after signing all the agreements, the government come across and change the mining conventions. So those kind of challenges needs to be critically looked into when you are looking at new assets which are yet to start the production and the development stage. And at the same point of time, look at how the global markets are moving in. Historically, we have seen the prices are volatile, but next 2 to 3 years, we see the prices of certain commodities remain stable while some of the commodities will remain more volatile. So our strategy has always been to look into those segments which will at least provide a bit of a stability as we move forward and continue to invest in the resources where we have a platform effect. So that's the approach that we have been following. Thank you.
Further to what's been said, I think the geopolitical situation is probably the number one issue that the mining industry needs to face at the moment. How to align yourself, how to partner correctly, and definitely not incorrectly. I think the West needs to realize that it's about 20 years late to the party and catch up very, very quickly. They still don't seem to be doing that. If you look at the amount of cash, for example, that China alone has put into nickel in Indonesia in a couple of years, and you still have Western governments debating how we're going to deploy or raise $1 billion here or there, they haven't got the message yet. And until that happens, they will fall further and further behind. I think this region is taking full advantage of that, being both east and west facing, and also happily being partnered up as a conduit into the global south. So I think the usual approach in this region of being able to take long-term views, particularly what that is very helpful in the mining industry as a long-term industry, will benefit this region in particular, not just domestically, but also as they start to reach out internationally.
Maybe we can continue on with that, discussion about the regional importance, to the industry overall. So the Middle East is taking quite a growing part in investment as well as mining itself. So, how are people navigating their roles in this growing industry today?
So actually, the Middle East has always been an important area for us in our LP base. So we've had a series of different sovereign wealth funds, and on top of that, pension funds, and on top of that, family offices invest in Orion over the years, right from inception 11 years ago, and into successor funds. So it's always been a very important place for us to come to raise capital. But there's no doubt that over the last couple of years, that landscape has changed. Right, so now I suppose you can look at this as a region that has got incredibly deep pools of capital available for investment, but now it's changed in the sense that there is really a vision, okay, a long-term vision which aligns itself really well with our space. And so the way that we think about the capital that is available for here is much more strategic now, and through that LP base that we have and partners that we have, they turn to us to think about how to do things, not just domestically within this region, but internationally as well. And so, we are spending even more time here now and looking to set up partnerships in the region.
And does that kind of go into this idea of the portfolio diversification and kind of growing it within the energy transition, critical mineral space?
That does come up in conversation, yes. There is a desire, I would say, to diversify here as well. But I suspect that the number one priority, particularly as you talk to sovereigns within the region, is about supply chain security. They've really done that across the board in different spaces, like in agriculture, for example, in the past. But moving away from the oil economy and really thinking about the future and the vision that underpins that, I think, is pretty impressive in the region. And they look to players like ourselves to assist in that.
Yeah, in terms of just like looking at the Middle East, what we've seen is this from our investors is just a shift. What was just typically oil and gas and aluminium smelting, which is now interesting with what's happening with the rebates in China and the exports, with the Middle East becoming, in terms of aluminium, trying to compensate for this lack of Chinese supply, expected at least, is more and more in interest. So our investors are talking more and more to us about, the copper assets are quite interesting, the gold assets are quite interesting. This vision 2030 also is boosting confidence. And from a geopolitical perspective, I think one of the appreciations is that the Middle East is being able, the GCC countries have been able to take somewhat of a neutral stance. They're friendly pretty much with everyone being from the West or the East. And I think with the election of Donald Trump, what's been interesting is also that I think some of the Saudi Arabians have reminded Trump that their stance vis-a-vis Iran has also changed compared to his first tenure. So that neutrality is somewhat, I think, interesting. And if they can keep it in the long term, that might boost some of the confidence.
Thank you. I think taking a leaf from what Tim mentioned, that West has been living under the influence that they have missed the train. But I think the feeling is mutual among the Middle Eastern sovereign wealth funds and the corporates as well. What we have seen, the trend shifting in last 5 to 10 years, a lot of corporates who have been not investing into certain parts, and again, going back to Africa, we have seen a huge amount of interest emerging from 3-4 countries, primarily from Saudi Arabia, which is obviously the leader, UAE, Qatar, Kuwait. And we have seen in recent last 1 to 2 years, Saudi Arabia even has gone and signed agreements with, let's say, DRC, Gabon, Morocco, Egypt, which significantly represents a large base of critical metals that they want to do. The second aspect, what we have seen is the value chain integration. While you mentioned rightly that moving away from the oil-based income, and many of these Middle Eastern economies have been pushing a lot on the manufacturing side now. Like you look at UAE, for an example, Ras Al Khaimah and Abu Dhabi both have been aggressively promoting special economic zone, export promoting zone, where they want to invite companies and set up manufacturing units there for a variety of factors. And let's say if you talk about EV or if you talk about solar panels, there has been a huge push to bring the downstream manufacturing into Middle Eastern segment. And the reliability of the upstream, which is the metals and the minerals primarily coming from Africa, not only offers a huge logistical advantage, but also to explore those areas where it gives them upstream value integration. So those are the factors where we have seen a lot of dry powder has been used to still access those assets which are in early stage or still need to enter into the development phase. And governments have been quite pushy directly through their sovereign wealth funds as well as through their corporates where their sovereign funds have invested. So both ways we have seen great action towards integrating into the upstream side. Thank you.
Yeah, touching on what was said earlier, the major governments have established capital vehicles to secure critical supplies, and the guys are very active, and you can see that in some of the deals that have been mentioned here already. And I suppose it's been a confluence of moving away from fossil fuels at the same time as some progressive thoughts in the region as well, and an emergence of economies. You know, for example, in Saudi Arabia, you've got a population of 40 million people, of which a little bit more than half of them are 30 years old or younger, and you've got a booming population that's got a lot of demand, and all of this happening at the right time, a confluence of events, which means they really need to get on with it, and which they are doing, both in the region generally, both there and in Abu Dhabi.
And if I just may add to what Tim mentioned, what we have also observed recently is some of the governments and their sovereign wealth funds, they have started collaborating and partnering with the sovereign wealth funds of various of the African countries, because they see that it is a right segue to enter into those countries by collaborating a G2G initiative where they are not directly exposed to the vagaries of certain governments which can act sometimes quote unquote under influence of different economies where they have more investments in those countries. So this is also a trend that what we have seen, collaboration between the investment funds of different countries, and then using it as a route or a vehicle to have more and more investments in a specific region or country. Like I have personally observed that, let's say in countries like DRC, Gabon, Angola, that has been quite catching up fast, where it's a G2G collaboration which is materializing under these contracts. Thank you.
Do we have any questions from the audience before we continue on? All right, so we've talked quite a bit about the role of sovereign wealth funds and the governments, but maybe we can look at investment overall and where the money is coming from to, from the region into projects. So, is it alternative investment? Is it private equity? Is it kind of partnerships with government? Where do you see kind of most of the money coming from right now?
Certainly from an Orion perspective, as I said before, this region has been an important component of our LP base for years and years. And so the investment that's been made is really purely financial up until this point. But now it's changed. Like I said, there's more vision behind what some of the sovereign wealth funds want to achieve here. And so, putting together partnerships whereby we can achieve mutual objectives is crucial to attract that capital. I would say just one thing about the way that we invest, and clearly we invest right across the capital stack. We do debt, product-linked instruments, and equity in roughly equal proportions. And it's the product-linked instruments that's of particular interest here, we find. So here we're talking about, yes, royalties and streams, but what we do, which is a bit of a differentiator, is that we deal with the physical, right? So we do offtake. It's an important part of our investment proposition. And so when it comes back to that problem that we're trying to solve for globally, but really the guys in the Middle East have got the upper hand at the moment, is trying to secure supply. And so if you can get hold of the offtake, then you have achieved that. And so as a consequence, that's becoming an ever more important part of the way that we do our business.
Yeah, I was going to say pretty much the same thing. From what we can see, if we expand a little bit out of the GCC and into North Africa, if we're talking about the Middle East or the Arab countries as a whole, done a lot of advisory looking at and projects looking at offtakes, and not just offtakes initially between some of the mining of metals related to the energy transition between the gigafactories and the mining themselves. So gigafactories in Europe taking offtakes from, let's say, Morocco, but also from the gigafactories towards the auto industry. So that's something that we've seen in the region, or generally speaking, across the board, being quite popular.
Yeah. I think my perspective is slightly different. What I have seen, certainly there is a lot of money, as I mentioned in my last response, there is a lot of dry powder, what we have seen in the Middle Eastern segment, and a lot of money which are now getting mobilized into mining assets recently, especially in the Middle Eastern segment, whether you look at Saudi or you look beyond, is a lot of local capital which is coming back. Earlier, these investors, or acting as LPs in various funds, they have been going through various channels to invest in assets which are either in the western side of the world or maybe in the African side of the world. But now when these investments are coming back, these investors are looking at onshore or nearshore investments where they are ready to put investments in their near country or home country. At the same time, I see that some of the banking sector investments will also start coming in as funding for debt or otherwise. If we see the trend, like let's say if we take example of PIF in Saudi, still they do not have a very heavy allocation or a portfolio allocation to the mining sector. They have been largely invested in growing the local economy and the companies which are coming to Saudi. But increasingly there has been an interest that can we look at the mining sector development in Saudi and UAE and in other countries in Middle Eastern region. So I believe that the trend to watch in next 2-3 years will be local capital getting mobilized within the countries. And at the same time, because of the local capital getting invested, a lot of co-investments will happen through the commercial banking channels, and maybe some of the DFIs will start taking interest because developing this region beyond the oil income, beyond the obvious what they have, has to have diversification into the mining segment. Thank you.
Yeah, I think just summarizing it's securing critical supplies, and that's a national agenda. So it's driven mainly off originally the sovereign wealth funds, but that will trickle down, and you'll have other institutions that follow. And some of that will be government-led, but some of that will just be private sector following what they see as a really good and necessary, essential to securing the supply chains.
We talk maybe a little bit more about these kind of key goals for the region. So whether it's securing these critical supplies, regional development. So what are these? Maybe we can expand a bit on these goals and how investment is flowing into certain, whether it's commodities or geographies, to enable that.
Maybe I can go first. Break the monotony of the sequencing. I think, Emmy, you have picked up a very important and critical element, and I see it from a very different lens, because if you see the GCC economies, the Middle Eastern economies, the biggest challenge that they have in front of them is how to create a sustainable job market. Historically, most of the jobs that you have seen is in the oil and gas sector, and primarily people working in the refining. Then in the UAE, we have seen a lot of jobs have been getting created in the real estate segment, where the companies like MR, Danube, Nakil, they have been doing massive developments. And what they have seen around COVID time, there has been a significant slump in the job creation segment, and which is directly linked with the investments which are flowing into the region. So if you look at the mining segment, that has been becoming an important area where they can catapult or leapfrog into the value creation, not only for the economic standpoint, but also from a development impact for job creation and investment flowing in. Like I was reading some articles, across GCC, the plan is to create more than 1 million jobs only in the mining sector, which is direct and indirect in nature. So I think when you talk about the sustainability and when you talk about the future outlook, it is very important to see that how governments look at economic development and what are the critical building blocks for that development factor, and then they work backwards and say whether mining segment or mining industry allows me to fulfill those development criterias that I have in mind. And I think for a large facets of things, mining does checkbox most of those ideas where government would like to also promote. So I will summarize that it's not directly, and it should not be looked into isolation as a mining segment. It should be looked holistically and macro factors which are trickling down to the mining industry, making it more favorable for many governments to promote, and especially job creation. Like Tim mentioned, Saudi Arabia, and we know 40 million population with the entire pyramid of population from super rich to even people living below the line, where they need to really sustain and provide more and more economic jobs. So these are some of the factors which will push the governments to continue making these investments in future. Thank you.
I think just maybe a word on sort of commodities and geographies, actually. So what we're seeing is, by the way, similar, but the difficulty with sort of the regional domestic investment proposition is that for an investor like ourselves, there aren't actually that many opportunities. There's an abundance of exploration opportunity in the region, but really in terms of, like, from an M&A perspective of a producing operation, there's not much going on. Or for construction capital, yeah, there are some opportunities, but not that much. But we'd be very, very interested in participating if that was the case. But what we're seeing more so is still, a need for international investment, and the focus really is on emerging markets. The developed markets like Canada and Australia and the US and Chile perhaps seem to be fairly well covered generally by the rest of the world. The opportunity set for security of supply is in emerging markets. And I'd argue that here is a wonderful hub to access all of those markets pretty much, particularly Africa. But we have interest across South America and in Asia as well. In terms of commodities, it's less so on the precious metal side, maybe a bit in PGMs because of the ambitions in the auto manufacturing in the region. But it is, generally speaking, where there is a strategic angle for host countries, and whether if that's energy transition related stuff or electrification stuff or anything actually that is relevant to the domestic supply chain, like for example green steel inputs. We're getting requests from our partners to really focus on those areas.
Do we have any questions from the audience? We've got one in the back here.
Totally. Well, but no one brings up Oman. Is Oman a country that's going to be brought forth?
Yeah. From a mining perspective, it has some interesting opportunities. They've started to launch some auction processes and attract some international investors. And yeah, there's some very interesting projects in the fertilizer space, the copper and gold space, a little bit of chrome up there as well. So yeah, it's geologically quite exciting, and they have set up a state mining company which has been tasked with developing the mining itself. They are also involved in the downstream. They have some downstream as well, and so across the board, they've been quite active historically and have developed some integrated value chains there. What also helps with Oman is there's a couple of major ports that have been built in the last couple of years. Duqm is the last one, the most recent one. And what really helps them is that those three zones all have free trade agreements with America. And that, I think, positions them very favorably with regard to the geopolitics and being able to attract some of the EV materials into those zones, and then being able to move those into America under the IRA and still be awarded the subsidies.
Are they open to the North American investment community the way Dubai is?
Very much so. Very much. Oman has always been, going back to the 1600s, has always been the friendliest people on earth and everyone's friends. And particularly even during some of the heated debates between the West and Iran, Oman basically negotiated all of those. They are seen very much as a safe pair of hands in the region, and very, trusted by the West very much so. Very much one of the West's biggest allies in the region.
Yeah, definitely. Geopolitically, I would say they've been historically the most neutral. Probably have no enemies in the area, and I've never had any beef with any of the neighboring countries, be it the Houthis or be it the Saudis or be it the Iranians. They're probably the absolutely most neutral, the Switzerland of the GCC, probably.
Any other questions from the audience before we start to wrap it up? We've got one over.
Thanks very much. Anish, in particular, you raised the issue of risk, and Tim as well. I'd just be curious to get, broadly speaking, for all of you, especially those operating in Africa, but also in the Middle East, how you assess risk. What are, say, the red lines for you? What are some of the issues that you see, and assess whether it's a go or a no-go in a project or an investment? Thanks.
I think the number one thing about mining is it takes time. And over that period of time, anything and everything normally does happen. In Africa, 20 years from exploration through to production, there's not only your general market conditions, but your local incidences, coups, fluctuations in currencies and all kinds of things. That's on a macro scale. Get down to the micro scale of dealing with communities and what have you. I mean, this is a tough industry. Often question whether the equity returns we make justify the risk we take. And I think that's why the likes of Orion and others have looked across the capital structure to make sure that they get their risk return right. For me, the biggest issue at the moment, I think, is permitting. And that is both from a government level as well as community and nearby stakeholder level. I think trying to get through that these days, just absolutely no one wants mines nearby them. So I think for me, that would be the number one risk I start to look at. And if I have a look at the couple of things in the press at the moment, that seems to be one that sticks out, and it's a tough one to manage.
Thank you, Tim. Thanks for the question. I think we typically assess the risk in an investment framework where obviously we divide it into manageable risk or controllable risk and uncontrollable risks. I think on the manageable side, the biggest factor that we put is availability of capital, because these mining assets will require huge amount of investments. Like recently we have done a mining convention in Cameroon, and in order to make that asset produce, it will require probably north of $1 billion investments. But capital availability has a direct implication with the uncontrollable risk, which is the political risk. And what we have seen, especially in some of the Central and West African countries, especially the Francophone countries, the kind of Arab upspring that we have seen many years ago, the similar kind of upspring which is underway for many Francophone countries where military coups are happening, political regimes are a bit uncertain, some of them nearing elections, some of them are bit volatile, both in terms of economic and political situations. So political risk is a very, very important factor for us when we look at making or acquiring assets. Second is the availability of capital. And third, which I say is community and social engagements. What we have seen recently, and Tim has touched briefly on it, is community and social engagements. Like the way we have seen a lot of financial institutions have started asking about your ESG and sustainability scores. Now, most of these institutions have also started asking, how are you going to manage biodiversity? Because in so many rich areas, which are rich lands of forests and fauna, they see that while doing these projects, are you endangering the local ecological balance? are you endangering the species? And hence becoming a specialist in biodiversity, making sure that the projects are not directly impacting the local ecological balance is also becoming a big risk. It may not come and hit you today, but increasingly in next 5 to 10 years, we see it is going to be one of the big topics for any such discussions, where large mining companies, how will they manage the biodiversity risk and mapping? And as an organization, we have already started working towards it. We do biodiversity mapping in a very digital and advanced manner these days, because we know that by the time you complete your exploration and drilling program, these things would have become obvious, so that you will be required to answer questions around it. So I think some of these factors, if I summarize: political risk, availability of capital, which is linked with the economic and political stability, and third is managing biodiversity and sustainability risk, are top of our agendas beyond everything. Thank you.
Anyone else?
So I agree with pretty much all of that. I think that from an Orion perspective, you have to assess investment opportunities on a case-by-case basis, because they present different risks that can be mitigated, some that can be partially mitigated, some that you cannot mitigate at all. And so we'll make our investments, trying to get returns on a risk-adjusted basis. Just pervades everything we do. But just, I think as it pertains to sort of emerging markets and the question around Africa, sustainability in ESG is top of the agenda for our LPs and therefore for ourselves. And so the way that we handle that is we just make sure that the culture and the frameworks that our portfolio companies put in place are reflective of best practice. So we'll be looking to work with our portfolio companies in things like Equator Principles 4, the right tailing standards, like the Canadian Dam Association standards, for example. And as a consequence, that best practice is instilled within the portfolio companies and therefore in our own framework.
And to continue on that conversation about risk, we will be touching on looking at different jurisdictions like Australia, Africa, as well as investing into the junior mining sector overall and how to assess risk in that space later on this morning and this afternoon. But we are pretty much at the end of the session, so I thought we could just have a quick wrap up from each of our panelists about, their thoughts on the growing importance of the region, which is essentially why we're here, and thoughts, kind of just forward-looking thoughts for the industry in the region moving forward.
I think it's an exciting time to be in the region. The focus, the mandate has changed from when I first arrived here to creating sustainable, diversified revenues for future generations. It's now shifted to nation building and a focus on that. I think there's a real keenness for partnership across securing critical supply chains, as well as skills sharing. It's something we haven't quite touched on today, but I think that's something that the region takes very seriously and embeds into everything that they try and do as all the industries they try and emerge here. And I think it's an exciting region to be in. It's a region you need to be in to partner with. They like to see commitment, and if you show that, they are very, very, they're excellent partners to have. There is big pools of capital here. There is a long-term view on things, which in our industry is essential, and they are coming to this point, I think, at a really, really good time in the emergence of critical commodities and all that's required in the whole integrated value chain, along with the infrastructure and the geography that places them literally at the center of the world for that.
Anyone else?
Yeah, I couldn't agree more with what Tim said, but I would just keep it short. Middle East offers good culture, good people, good food, and they are at the starting point. So don't miss the bus. You need to start now before it is too late. Don't realize like the Western worlds have realized for many other areas. This is the right time to get started. And most importantly, this is a region, besides being pool of capital, it offers a very good political certainty to do long-term projects. If we see across the world that we see the war zones which are happening across the world, this region is probably the most stable and growing at a pace which is required for any economy from a GDP growth perspective. So I would say that why not? If we are ready to work in uncertainty in many other areas, then this probably is the jewel of the crown. Thank you.
Yeah, I guess it's still a nascent area, but it's refreshing to see that finally, after decades, we've got a new big area to start exploring and start doing business in. But as you said, it's still the projects are still limited, the opportunities are somewhat still limited, but the positioning from now will be very important in an area that just benefits from great political stability and the capacity to attract any skill set they want, given the capital and infrastructure they have.
I would just say I think it's pretty simple, really. You've got this brilliant, exciting combination of deep pools of capital and vision, and you just got to be part of it.
Well, that's a very good wrap up. I don't have to summarize any more myself. But thank you to all of our panelists for joining us here to kick off the event today.